morning. Good morning. Y'all excuse my tardiness. I had to go by the neighborhood market. And I had to do it beforehand. Then I got, a little caught up. So I apologize for my tardiness. Let me get myself together. I see this funky market did what I wanted it to do when I was up at 4 o'clock. I was up from 3 o'clock to 5 o'clock trying to get me a trade off, and it wouldn't do it. It wouldn't give me my setup. Good morning. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. This is day cuatro of Tape Reading with Timmy. I really hope y'all have been finding it valuable. Hope you've been, getting a understanding. I don't know why I dropped that down. Hope you've been getting an understanding of how to piece it together, meaning all of the ICT concepts. Shout out Big Mickey, Big Mick. I'm rocking Big Mick today. How to piece together all the ICT concepts when it comes to actually reading the tape, and how to mentally prepare yourself for sitting through the motions, not wanting to just jump in and attack the market at any time. You want to jump in and attack at the perfect time. What's the perfect time? The time that you put in the work of studying and you've predicted based off of algorithmic signatures, price, when it goes to this dollar amount, it should go back to this dollar amount. And if it doesn't do it in a specific algorithmic way, then hey, some debauchery is afoot. Let me sit on my hands. But if it gives you the algorithmic signatures that we've been studying all week, hope you've been picking up on them. And if you haven't been picking up on them, don't say, Tim, what algorithm signatures are you talking about? Because we've been talking about it all week. You were sleeping in the back of the class. Now, let me shout out. Let's look at the calendar real quick. If you're a day trader, you always want to go to either forexfactory.com or econoday.com and look to see if there's any red news events that's going to happen during the trading session, and you want to be out of your position at that time because it can potentially cause a big spike like CPI, PPI, FOMC, non-farm payroll, all that stuff. So today, the big dog, this industrial products and jobless claims, that's happened. That's happened already. So the rest of the day, no news to worry about for the U.S. indices. Forex Factory, you can look at all the other FX stuff that you trade. I don't trade FX. That's why I just come to Econo-D. It's laid out in a way I understand and all of that. Now, news is out of the way. If you know anybody that may benefit from this, share it with them. Tomorrow's the last day. Tomorrow's the last day of Tape Reading with Timmy. Hope y'all found value in it. Let's go back and get our bearings together. As you see, I'm gonna shout everybody out once we get our bearings together. As you see, overnight I marked out. Let me put my fancy dancy on. Hit the wrong button. Overnight I marked out the consequent encroachment of this daily wick. Right, that's the only, outside of this high, That's the only daily imbalance above us. We've respected this bearish fair value gap 2 days in a row. Right? 2 days in a row, we've respected this bearish fair value gap. And today we are still respecting. This is a daily fair value gap. So we got to wait and see what this daily candle does on a closing basis to call it. So this is the only daily imbalance above price, the consequent encroachment of that daily wick. That's why I marked that out. Now we've already taken out yesterday's low, and we've tapped into the daily fair value gap that's below us. If we grade it, we're going to grade it. We're not going to grade it on the curve. We're just going to grade it. Right? We have not come to the upper 25% yet. Right? The upper 25% is at 44.9225. So we've dipped into the fair value gap already. We've taken out yesterday's sell side. So on the daily time frame, that's all I want to look at. On the 4-hour time frame, there's nothing for me to mark out. There's no 4-hour imbalances above us. It's just the same huge imbalance, just like the daily below us. So on the 4-hour time frame, this long wick here is a 4-hour. So I just marked out the daily. Right? Whenever there's a lower time frame PD array above, you have to allow for it, but you don't really expect it. So if you trying to short off of this level, you just have to allow for that level, but you're not expecting it. Right? On the hourly time frame, we have so far taken, the market is open, the market is open, the market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious notes and study what you saw today. Thank you. We've already taken out the London high on this 8 o'clock candle. We have not taken out the Asian low, right? We opened up. Oh, there's my new day opening gap there. Okay. So we opened up around here, pushed up, came down, took out yesterday's sell side. Came back up, took out the Asian high during the London, set a London high, but we were just consolidating when we did that. Now, since then, we've come down, right? Taken out the sell side, got down below midnight, set a new low without taking out the Asian low, then pushed back up and took out the London high. Right? Took out the London high and closed above the London high. Then we came all the way back down below midnight and below yesterday's low. Let's see exactly when we did that. We did that from 9 o'clock until 9:30 at night. We opened up here at 9:30. So from 9 o'clock up until 9 o'clock, from 9 o'clock up until 9:30, we came all the way back down into this bullish order block right here. So price got 15-minute bullish order block. Now, our bearings are together. Let me set the stage for our tape reading session. Let's check this real quick. There was some slight divergence around, well, not slight, there was divergence around it's been divergence. It's just been divergence. I ain't even gonna hold you. Right? Because look at how the Dow look, and look at how the NQ look, and look at how the ES look. These hourly candles. The Dow should not be going up and consolidating, and these coming down and consolidating. That's divergence. See, down, consolidate, up, consolidate. That's divergence. They shouldn't look like that over these many hours. They can get out of sync for 15, 20 minutes to an hour. Yeah, that's fine. They ain't got to be lockstep. But over these many hours, this should not be going up and consolidating, and these are coming down and consolidating. That's divergence. That creates what we like to call chop slop. Tomorrow is OPEX monthly. Monthly OPEX. Yes, it's November, the 3rd week. 1, 2, 3. Yes, tomorrow is monthly OPEX for options expirations. Anybody who don't know what OPEX, I say OPEX. A lot of people say OPEX. OPEX makes sense to me because it's options expiration. So OPEX. OPEC is a oil thing. OPEC or something like that. OPEC is an oil thing, but a lot of people say OPEX. But OPEX makes more sense to me. Options expiration. And you have monthly expirations, and it's always the third Friday of the month. And then on the third month of the quarter, that third Friday is the quarterly expiration. And that's around what they call quad witch or triple witch, quad witch, whatever they call it these days. It's, a lot of stuff expiring. Let's see what it goings on. This 15-minute, this was the only 15-minute imbalance above us. Me and the Black Spiders talked about this last night on the live stream. We respected it in London. We respected it again in London. Then we just came back to it, and we've respected it thus far. So we're still respecting this 15-minute premium PD array. Right now, we're just consolidating. Since we're respecting the premium arrays, it's technically a sale program, but we're not selling off. And why are we not selling off? Probably because of divergence. Probably. It's not acting super algorithmic. Just like I was talking about when I was trying to take a trade this morning when I first got on. Right here around this 4 o'clock candle, when we came up here and we took out this buy side and we wicked off. I was looking for displacement to give me a fair value gap, which it did right there. Right? It gave me a fair value gap right there, but it didn't take out the low before giving me the fair value gap. So I didn't want to short off that. I said, oh, well, I'm going back to bed because it's just chop slop. It's not going to give me what I want. And then I see we eventually did sell off a little bit, but we didn't even reach the sell side that I would have been targeting. So, it did move some. I could have gotten because I wanted to go short around here. It was something 18. It was like a lower time frame. It was 45, 18, 25, I think. Let's see what it looked like over here. Oh, I'm in the wrong time. Let me turn on these crosshairs. So right there. Okay. So here we go right here. Right there. That fair value gap right there. That's the fair value gap I was trying to get short off of right there. 45, 18, 25. You see there, it came up there and it didn't pick me up. And then it pushed down. Dilly-dally, dilly-dally, dilly-dally. And I was like, you know what? Forget it. It's not doing what I want. That's the fair value gap I want to get short off of right there. I didn't like it here because we hadn't taken out a low. And then we eventually made a move, but look at the heat. Would have had to take that heat coming all the way back up to the fair value gap. So it wasn't really algorithmic for me. It was just chop slop. So I left it alone. Now back to let me shout y'all out. I forgot to shout y'all out. Excuse me. Good morning, here to learn and share. Good morning, Rhonda Green. Oh man, I turned that heat up to knock the chill off. I forgot to turn it down. Y'all give me a minute. Rhonda, why you still on my screen? Get off my screen, Rhonda. What's up, FC? What's going on, Thomas? What's up, Seahawk? What's up, Kenya? What's up, Candlesticks? Private Company. Michelle Tucker. What's up, E-Rock? Father of Legends. What's up, Lump? Sonia, Lil Hawk, Hines, F Mac, Finest Superman, Laverne. Buenos dias, Valdez. Buenos dias. Sanjay, J Rock, Max K. What? I ain't seen Max K in a minute. Where you been, Max K? Okay. We're still dilly-dallying inside this daily fair value gap. The one that we had repriced. It's a daily bearish fair value gap. The one that we had repriced on the let's look at it on the daily time frame real quick. Una dia. This one right here. That daily fair value gap right there. I like the daily gap right there. That one there. We repriced it, respected it, right? Pushed all the way up to another. What do we push up to here? I can't remember what we pushed up to here, but we ran up to something there. We talked about it. I can't remember what it was. Came back down, respected it, closed below it again. And now here today, we've opened below it and we've pushed up through it overnight and pushed down below it overnight. So we've done a whole lot overnight. A whole lot and a whole lot of nothing because we're basically flat right now. Basically flat right now. Is the market trying to digest this humongous move? If you notice, what we talk about all of the time, right? It would be well within reason if we just sat here for a couple of days and consolidated. Why is that? If you turn your attention over here, we consolidated in this area before. So when we engineered liquidity over here this time, the market got net short. How do we know? So if the market decides to consolidate over here this time, what are they going to be doing? Offsetting what they did over here to get long. Get long and do what? Complete this market maker buy model. Original consolidation, market maker buy model, right? The last little stage of consolidation over here to get net long again, and then take out the high above the original consolidation. This is a daily high. This is a weekly high, right? This is a daily swing high. Yes, it's a daily swing high too, but on the weekly chart, this is a weekly swing high, and this is a monthly swing high. Yes, we're looking at all daily candles, but if you go up to those time frames, this candle, this right here around this Friday of 15 September, this is a weekly high for that week. This Friday of 1 September, this is a daily high. I'm sorry. This Friday of 1 September, this is a weekly high. This Thursday of 27 July, this is a monthly high. Now, let's get it back together and go look at charts. I'm gonna leave this on 4 hour and just minimize him. You know what? I'll just put it on the screen over here so that I can come get it when I need it. Get it when I need it. Come and get it when I need it. Get it when I need it. Okay. Not a lot of activity today. Again, like we were saying, we've respected this. Okay. We have a hourly. No, that's how do I keep getting on 15 minutes up here? Yeah, hold on. Let me get it together, man. Okay, now. Because I'm like, man, I don't remember no hourly imbalances. Okay, so looking at the hourly, we have disrespected this hourly SIBI. right? So this hourly SIBI has been disrespected again. We offered buy side, right? So we repriced it, buy side delivery, repriced it, came back down through it, again closed below it, went back up, did not take out the sell side. Here we took out the sell side up under this consolidation, but we did not take out the longer term sell side, not long term, longer term. This is just the short term sell side under the consolidation. Then we pushed back up and took out this buy side here from the London high, closing above it. And this is an hourly. That's why I'm pointing out the closures. This is the hourly imbalance, closed above it. And so now for now, the market has chosen on the hourly level to be above the discount PD arrays, right? This is just a short-term shift in sentiment. The hourly bullish, the bullish break, no, right here. We have a bullish break in market structure. This took a low, but so on this calendar here, that was a bullish break in market structure. On this 4 a.m. candle, we had a bullish break in market structure on the hourly, came back down. Then we now we've had a bullish break in market structure. Then we've come back and taken out that session high right there. So we've taken out the Asian high in the London, and now the New York has taken out the Asian high. So this high took out that session high, which was a bullish break in market structure. Then the new session has taken out that session high. So the hourly time frame for now is choosing bullishness. A lot of liquidity is engineered here because we've come a stone's throw away from it and did not take it. So a lot of liquidity is there. Be careful of that and chop slop. It ain't really doing nothing, so I'm just analyzing the price right now. We have a 15-minute. We have a 15-minute SIBI right here on the 9 a.m. candle. We got 13 minutes left on this 9:45 candle that we're working on right now. The 9:30 candle has respected it. Let's do this. I'm gonna copy this. Then I'm gonna turn this one gray because we repriced it all the way to the top. And we're below it. So that job is to keep price down, which has been doing. All right. So this 15-minute job is to keep price down, which has been doing. Now, this 15-minute right here job is to keep price down. So we want to watch and see what it does. We have 13 minutes for this candle to close. We want to see, make this big. I'm sorry, y'all. We want to see how this 9:45 candle closes in relations to this 9 a.m. SIBI, which is marked out with this red box, and this 3:45 SIBI from yesterday, which is now marked out by that gray box just above. And then this dark gray box is the, I don't know what that is. Is that the new day opening gap? Oh no, that's the hourly thing that I just marked. I marked that out. Okay, that's the hourly SIBI that I marked out. Okay, so that's the hourly SIBI that we repriced, and its job is to keep price up because we're above it now. We've repriced it and we're above it. So we got an hourly SIBI below us that we've repriced, and its job is to keep price up. That's where we're sitting. So we're in between a bunch of opposing PD arrays. There was divergence amongst the indices. So all of that means high resistance liquidity run. High resistance liquidity run. It's getting too sloppy. I'm just going to delete that. We're just going to try to remember that that's there right around the midnight. We're going to try to remember that's there. Okay, we're still pushing up through that 15-minute SIBI. We just pushed up through this 5-minute SIBI. Remember, the hourly has chosen bullishness. The hourly has chosen bullishness. We closed above that high. Wicks do the damage, bodies tell the story. So on this hourly candle here, we've come all the way back down below midnight. Keep in mind, the hourly has chosen bullishness, and dropping down below midnight would give smart money that wants to get long during in New York an opportunity to get long below opening price in a discount, in a deep discount. Just analyzing price, not saying that's what's happening, just analyzing price. The only daily imbalance above us is this consequent encroachment of this wick at 42.28.50. If price decides to get up there, we want to see how price reacts to that. On the 15-minute basis, we've come back up close to the high of that 15-minute SIBI, whose job is to keep price down. We've respected it. We went to the top. We respected it here, went all the way to the top of it, and then quickly left back out. So now that's a balanced price range whose job is to keep price down. We've gone all the way back very close to the top of it. And let's see how it plays out. This right here is a 15-minute SIBI. Let me give it another color so that it'll stand out. We'll make it blue. That one is their job is to keep price down on a 15-minute close. We're looking at what this, we got 10 minutes left on this, 9 minutes left on this 9:45 candle, looking to see what this candle does in relations to this SIBI. Does it close below consequent encroachment? That's how you see if it's still respecting it or not. Any closure below that line, below that purple line, below the SIBI at all, is still respecting that SIBI. On the 5-minute, 1 minute, we've created a bullish fair value gap. 1 minute, we have let me see here. So this is all of this is within this candle right here. So within this this 9 o'clock candle right here, right? If you look at the 1 minute chart, when I hover over this 9 o'clock candle right there, you see that it starts there, right here. So within that 9 o'clock, we've come down, right? We've come down and went below, you know, all of these swing lows. We've come down below all these swing lows, and then we reversed all the way back up, just falling short of the high. And now we're consolidating. All right, got opposing consolidations here. We've repriced the last imbalance on the 1 minute in this entire move here. This 1 minute market maker buy model right here. Right. We came up to a anticipatory reactionary point, smart money reversal, came down, all of the, you know, accumulation, reaccumulation, smart money reversal again, redistribution, distribution, whatever you call it, you know what I'm saying, come up, and now we're back up at the original consolidation, and we're fighting with that 15-minute SIBI, whose job is to keep price down. Remembering that the hourly had a bullish break in market structure on the 4 a.m. candle, taking out the high of this 7 p.m. candle. Right, taking out the high of that 7 p.m. candle was taking out the high of the Asian session. again, we took out the high of the Asian session at 4 during the London. Then the New York has came back and taken out the high of the London. Right. Bullish breaking market structure at 4, came back down, left the sell side intact, right? Left the sell side intact and took out the buy side. So we're respecting discount PD arrays and disrespecting premium PD arrays on the hourly. The hourly has chosen a bullish narrative, a buy program. The hourly has chosen a buy program. We got 37 seconds left on this 5-minute candle. This 5-minute candle has disrespected that 5-minute BISI right there. So the 5-minute is respecting discount PD arrays and pushing through premium PD arrays. So the 5-minute is in a buy program, breaking market structure, bullish breaking market structure on the 5-minute. All right. So we got a everybody. We got 5 minutes left on this right here. Everybody is seeming to be following along with the hourly right now. We've taken out the buy side. So the next liquidity is up here right around consequent encroachment of that daily wick. If we take this, there's an hourly swing high right there at 45.29.50. And the consequent encroachment of that daily wick is 45.28 even. And no, 45.28.50, and the swing high is at 45.29.50. So 1 point difference there. There's no other 15-minute imbalances above price. That's the only other imbalance above price. Let's check the 5-minute. There is a 5-minute imbalance. Oh yeah, because I'm like, I thought it was something. This is me and the black spotters pointed this out last night. I'm like, I thought it was another imbalance somewhere, but there it is. We have a 5-minute SIBI. That, and I see we pushing through it over. If you look over here, when I just pop that in there, I see we pushing through it. We'll mark it out anyway. What J-Rock said, consolidating at London high. It was yeah, it was. Right at the London high, right there. We was consolidating right there. Okay, on the 1 minute, we got, so on the 5-minute up here, we got 2 minutes left on this. We got 2 minutes left on this 5-minute candle right here. Looking to see how it responds to this 5-minute SIBI. We've moved up with displacement. We have one 5-minute SIBI that has been created. And then we got 5 minutes and we'll potentially create another one. Okay, on the 1 minute, we've created a 1 minute. I said SIBI, BISI. I'm sorry. Got a BISI and a BISI imbalance. 5-minute bullish imbalance going up. On the 1 minute, we have a bullish imbalance here on the 954 candle. On the 5 minute, it's the 945 candle, where the imbalance is sitting right now. Since we only got 1 minute left on this 15-minute candle right here that we're working on this 945 candle, I'm going to take this 945, this 9 o'clock SIBI, and I'm going to move it over here to this 5 minute bullish imbalance and mark that out in the current price leg. Mark it out in the current price leg that we're in. So I ain't just drawing stuff on top of stuff on top of stuff on top of stuff. So we got 14 seconds left on this, and it's looking like we're gonna get a strong closure above this SIBI. We were saying the job was to keep price down, but we got 2 seconds, and now the candle closed. Strong closure above that. So now we're above this. So now this job is to support price because we're back above it, and we're in a buy program. So its job is to support price. Its job is to support price. The next buy side coming up is 45.29.50. That's the next imbalance on, yes, the 5 minute. I think it's on all time frames now. Yes, no imbalance. Yes, no more 5 minute imbalances above the one that we just repriced through. Let's see if we got a closure yet. We got a closure right at the high of it. Got a closure right at the high of it. We've closed above mean threshold, so that heightens the probability of we're going to keep going up. The bodies is still respecting it, but it's closing above mean threshold, so that's a signature of the algorithm saying I want to stay on top of this for the time being. This 5 minute candle, I want to stay on top of it until I handle some other business. What other business is it? The only thing we got to draw towards, we got the consequent encroachment of that daily wick and that hourly swing high at 45.28.50 and 45.29.50 respectively. Respectively means whichever one you said first, the first number is that one. Whichever one you said second, the second number is that one. We just pull back down into a 5 minute volume imbalance there. We have 2 BISIs on top of each other. When the algorithm give you 2 BISIs like that, if price is exceedingly bullish, you don't want to see it come down to that second one. You just want to see it hit that first one and keep going, especially when that first one is right there at the break-in market structure, right? Because you have these, these overlapping PD arrays there. So you would like to see price just hit that and keep going. On top of that, it's right in line with this 15 minute imbalance, whose job is supposed to be to keep price up. So you have a 5 minute bullish imbalance sitting right on top of a 15 minute bearish imbalance, which is now supposed to act as an inversion fair value gap. And so you want to see price be very sensitive to that and keep going, because look at this hourly rejection on this candle here. The hourly is eager to go. It's raring to go. So you want to see this. We just hit this volume imbalance there. You want to, if price gets back down to this bullish 5 minute imbalance, you want to see it keep price up. That'll be algorithmic. That'll be, algorithm. If it slips all the way down here to this imbalance here, it can do that, but that's sloppy. That's sloppy. That's slop. That's chop slop. That's sloppy. It's 10:03. It's 10:03. Let's move into do anybody have anything? Let's move into does anybody have anything? If you have any questions or anything you want to share. If you have any questions or anything you want to share. This 5-minute candle here has a minute left. We want to see how it reacts to this 950 BSI on a closing basis. That's what we're watching. How this 5-minute candle reacts to this 5-minute BSI at 950 on a closing basis. We've come back down to consequent encroachment of the 15-minute SIBI that should be acting as an inversion fair value gap. We're working on a potential BSI on the 15-minute for the 945 candle. We got 10 minutes left on this 10 o'clock candle. All right. Oh, I forgot to mark out the macro times today. I forgot to mark out the macro times. So the macro attacked the buy side. Sorry, we didn't talk about the macro time today. So the macro at 950, it engaged the buy side right there. Right, the 950 macro, we went up, engaged the buy side on the 950 macro. What buy side did we engage? This swing high right there. That swing high right there. And there's an imbalance. Remember, I told you it can do multiple. We engaged buy side, we engaged an imbalance. All right. And then this candle, the body respected it. This candle, the body respected it. It's, you know what I'm saying, it's above mean threshold, consequent encroachment. So I don't like that. That weakens it in my mind. You know what I'm saying? But it is respecting it. It can respect it, but I don't like to see it close above it. Now, like this. See this 5-minute candle right here at 10 o'clock? We closed below this 950 BSI. Right? We closed below that 950 BSI. On the 5-minute time frame wise, that's chop slop. Why do I say that? Because looking at the hourly time frame, right, we don't have an imbalance or anything yet to come back to. We're still working on that. On the 15-minute, we're still working on that. On the hourly, we're still working on that. Save this hourly wick right here. You know what I'm saying? But other than that, we don't have any imbalance for it to really want to come back down to. We came all the way back down to the consequent encroachment of this 15-minute imbalance. All right. That was unnecessary. That's chop slop. You have a whole 5-minute imbalance here whose job is to keep price up. Why you want to push through it like that? Yeah, true. We got this imbalance down here, but if price is exceedingly bullish, algorithmically, this 950 BSI should just push price up. We just chop slop. Let's look at the indices, see if there's any divergence. Yep. Look at these hourly candles right here. What did we just say? We were in chop slop. What did we just say? It's not acting algorithmically. And then when we go and look, this is the hourly candle on the Dow. This is the hourly candle on the NQ. This is the hourly candle on the ES. This one just turned red, but look at the difference in them. And then look at how close the last high in this range. Look at the ES and the NQ high, and look at the Dow. The Dow, the high is way down here. The Dow made a new high. The ES and the NQ been melting down. All right, get over here to, this hour that we're in now. Right, the Dow is like slinging to the downside. The NQ just poked red, and the ES is the red-headed stepchild in the middle. I don't see anything in the chat. It's 10:08. We've come back down to the discount. Are we in a discount? Let's see if we're in a discount. Let's look at the entire move for the 5 minute. If we go from the entire move to there, we haven't made it to the discount yet. But if we go from this right here, these equal lows here, we just made it back to equilibrium. So this right here would be the discount of this price leg here. Right. And that's the discount of this price leg here. And I know you might be saying, Tim, you always say we want to buy in a discount selling a premium. Well, why would we want to have bought off of that? Because algorithmically, if it was exceedingly bullish, the 1 minute would have been working off this price range, and that 5 minute imbalance lines up with a 1 minute imbalance that's in the discount of this price move here. Right. We came over opposing consolidations, took off with displacement, taking out that buy side. Price should have traded back into that imbalance, which lined up with that imbalance, which lined up with this inversion fair value gap, which should have kept price up immediately. So you were in a discount on this price leg at a point with 3 tiers of confluence of continuing up. But since we're in a high resistance liquidity run because of divergence, we're in chop slop. We're in chop slop. I'm trying to talk through like the algorithmic signatures because we're just chopping, and I know people be wanting to know, hey, how can I use this to trade? And hopefully you're understanding how to use it to trade. Looking at these high resistance conditions and getting the understanding of what it should be doing based off algorithmic behavior and based off of manipulation and high resistance. Hopefully it's making sense. If it's not making sense, keep studying it, keep, watching price, record your screen if you have to. Trading View, the playback is very wonky. Ninja Trader, the playback, it plays smoothly, but like the drawings and stuff be disappearing and the wicks be acting crazy when you be in playback, but it plays back smooth like every single tick. Just continue to watch price. This 5 minute Bissy's job, we've disrespected a discount PD rate on the 5 minute. We've come back down to another 5 minute PD rate that's in the discount of the 5 minute move. All right, come back down to a discount PD rate of the 5 minute move. Okay. We got 2 minutes left on this 15-minute candle to see if we're going to have a tiny fair value gap or if we're going to get an immediate rebalance, meaning is we come all the way down and overlap the price from this 9:30 wick and this 10 o'clock wick. Well, 9:30 candle and 10 o'clock candle. Watching that on the 15-minute. On the 5 minute, like I said, we've come down into the discount Bissy of the entire 5 minute price leg move. The 1 minute coming into this Bissy gave the 1 minute a bearish break in market structure. It's just the 1 minute. It's not a whole lot of weight to it, but we do have a 1 minute SIBI overlapping with this 1 minute BIS. This 5 minute Bissy right here, and that 1 minute Bissy. So this 1 minute Bissy job is to keep price down, now that we're below it. Now that we're below it, its job is to keep price down. Y'all see how this stacks on top of each other? This is why in the high resistance liquidity runs, you be like, what? Because this one job is to keep it down. This one job is to keep it up. We're in between those. Who's going to do their job? High resistance, low probability, right? We're staring at the liquidity right there, but are we going to attack it? This PD array says yes. That PD array says no. This PD array says no. This PD array says yes. Are we going to attack it? 1014. 1014. Do anybody have anything for me? We have 6 minutes. 6 minutes. 6 minutes. And I'm gone. 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 While we waiting to see if anybody have anything and watch the price just tick around. That 5 minute candle closed right at consequent encroachment. Watch consequent encroachment on the 5 minute. You want to see what the 5 minute candles do with this BISI in total, and you want to see what it does with consequent encroachment. If it closes, if it respects consequent encroachment, then this 945 BISI is doing its job. We've come all the way down to the low of it. All right, came all the way down to the low of it. On the 15 minute, we did get a very small BISI. Very small BISI on the 15 minute. And now we've traded down and through it. It was a very small BISI. What was it, like one tick? What's the high of this candle? 45.1775. And then the low of this candle is 45.1825. So that's 2 tick. Small little 2 tick BISI on the 15 minute. Almost was an immediate rebalance. Because where the high of this 930 candle to where this 10 o'clock candle open, if this 10 o'clock candle hadn't traded down, there would be a big BISI right here. But we've come all the way down and almost immediately rebalanced it. Tim, you have a video on chart settings and the indicators you use. I don't use any indicators. I don't use any indicators. All I do is read the price. No indicators at all. Chart setting. What do you mean by chart settings? FMAC, what do you mean by chart settings? I have a 60-minute chart here, 15-minute chart here, a 5-minute chart here, a 1-minute chart here. That's how I watch price. And like on my Ninja Trader, I also have a 15-second chart and a 30-second. I got a 30-second chart and 15-second chart. So I got 6 charts up in Ninja Trader, and then I watch one chart like on a time, like usually on a 15-minute or a 5-minute. I'll just watch price move on that. We're coming back down to the low. We just came back down to the low of the daily fair value gap that we had repriced this gray box over here. Big gray box. We just came back down to the low of that. We have a minute and 30 seconds left on this 5-minute candle to see if it closes above or below consequent encroachment of this 5-minute BISI, whose job is to keep price up. We've already disrespected 1 5-minute. We've disrespected the 15-minute fair value gap again. What's up, Frank? My calendars look so different. I also use fair value gap indicator. I don't use any indicators. I draw my fair value gaps out manually. I draw everything out manually. I don't use fair value gaps indicator. And I only draw out certain fair value gaps that I'm watching for a specific reason. Like if I'm looking at it for a specific reason, then I'll draw it out. Like I drew this one out because it was the discount, and I drew this one out because this was the one that should have kept price up based off of algorithmic trading. But since we got chop slop, it's not trading algorithmically, and we've came all the way back down to the new day opening gap, and we've pushed below the new day opening gap now. Right. All the time frames had chosen to break bullish. Right. Every time frame had chosen to break bullish, and now we're coming back down. We're coming back down to there is a 1 minute fair value gap down there. I will give it that. But algorithmically speaking, coming all the way back down here, just because of that 1 minute fair value gap, that's not algorithmic. That's manipulative. Because there's so many higher time frame PD arrays that we're disrespecting. We're going from buy program to sell program, buy program to sell program, buy program to sell program. It's like we're chop slop, chop slop, chop slop. Let's look at what the dollar doing. It's 10.20. I don't see anything in the chat. I appreciate y'all for hanging out with me. If you have a friend, or if you have anyone that you think may gain any type of value out of these tape reading sessions, tomorrow, mañana, is the last day of Tape Reading with Timmy, the free event brought to you by the good folks at Tim's Tidbits. Day 5. I've shared everything that I know as far as how I use and how I understand the ICT concepts. The only thing that you can't share in a pre-recorded video is live tape reading. So we did this 5-day event to read the tape together. Yeah, we threw in some stuff as far as like trade ideas and all of that, but I've been trying my best to express why we're looking at certain PD arrays, what these PD arrays should be doing based off the time frames they are on. All this week, price has not been moving algorithmic. It's just been everything being pushed by the news. It'll be pushed by the news and then snooze. 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 Hey, share it with a friend. Tell them to pull up. I forgot to put it on Twitter today. Tell them to pull up tomorrow at 9:20. Again, I jollipots for my tardiness. But tell them to pull up tomorrow at 9:20 for the last day of tape reading with Timmy. Hopefully tomorrow is more exciting. But one last time, as I say you're welcome to everybody. If you have any questions, one last time, you got 15 seconds to type it in. C-Walk, you're welcome. Laverne, you're welcome. Taryn, you're welcome. Taryn, when you slid up in here, you're welcome. E-Rock, you're welcome. Kenya, you're welcome. Franklin, you're welcome. RS, steady gains and chasing the daily range is tough. Nailing the daily target is sweet, but hitting reversals makes me question going for smaller wins. Ever been in this spot? How'd you handle it? I'm in that spot right now. I don't know if you, RS, you might have not have been here yesterday, but I was like, I am chomping at the bit to take a trade. Every day has been just chop slop during the times that I trade. It's just been chop slop. The only way to handle it is to stick to your rules. If it's not your setup, don't take it. If it's not high probability, don't take it. If the market is not moving algorithmically, if there's divergence, if there's high resistance, don't take it. Live to trade another day. Yesterday, I texted my wife. I said, this market is pissing me off. I'm getting ready to go to the gym. So I got up and I went to the gym. I go to the gym on Monday, Wednesdays, and Fridays. I'm back into it. I had took some time off because I was having some issues with my big old age of 50. My body needed a break. I was hurting. I had issues. I went to the doctor and everything. But I'm back at it. So I went to the gym. I got to the gym in my Crocs. So I couldn't work out. So I had to come back home. But walk away. If it's not giving you what you want, don't sit there and get analysis paralysis and then get FOMO and do something stupid. Just walk away. If the market is not giving you what you want, and have specific time windows when you want to trade. Me, I have specific time windows when I want to trade. If I get up during London, right? If I don't have a trade before, if I don't enter a trade by 4:30, I don't take a trade. I get up at 3. If it don't give me my setup by 4:30, I don't take the trade. Why? Because from 5 until 7:30, 8:30, the market goes into a snooze fest most of the time. During the New York session, right? I don't trade the first 30 minutes. If I don't get a trade between 10 o'clock and 11:30 at the latest, I want it between 10 o'clock and 11:15ish, because I get off at 11, but I'll sit here until 11:15 sometimes. But so if I don't get into the trade between 10 o'clock and 11:30 at the latest, I don't take a trade. If I trade the afternoon, right? The afternoon, I'm not the best at trading the afternoon, so I try not to take a trade after 3:15. Sometimes if it's just too tempting, or if I've been waiting on this one setup and it's just that close, I will take it up until 3:30. But I try not to trade in that last hour because a lot of times it just consolidates. But give yourself rules of when you're not going to trade, why you're not going to trade, and stick to your rules. Rhonda, have a great day. Taryn, hiding in the back. Sanjay, yes, a lot of news and OPEX. Chop slop. OPEX is known for being volatile, meaning price just go, it'll shoot up, shoot down, shoot up, shoot down. Sanjay, I just said something to you, Sanjay. Get on my screen. Here to learn and share. You're welcome. Last one, and we gonna get up out of here. Appreciate the answer. Okay. Sometimes I see price respecting all my drawings beautifully. Price delivery, beautiful price delivery days. When it doesn't, I'm still in the phase where I force and sabotage. Yeah, we all do that. We all force and sabotage. That's why I say give yourself clear rules. Clear rules. If it's acting algorithmically, meaning, what do you mean acting algorithmically, Timmy? If you're looking at a 15-minute chart and you have a 15-minute BISI and you're above that BISI, that bullish fair value gap, that's a BISI. On the 15-minute chart, those candles on a closing basis should close above at least above, you really want it above the high of the fair value gap, but above the consequent encroachment or the halfway point of that fair value gap, and you don't want to see it hanging around a long time, right? You don't want to see it hanging around a long time. You want to see it, touch it, hit that institutional order flow entry drill, maybe get down to the top 25% and get gone, right? If you're looking at an hourly, same thing. If you're looking at a 5 minute, same thing, right? So if you look like I said down here, in the context, how do you conceptualize the lower time frames, right? This, let's walk through this right now, and then I'm gonna get out of here. I already said it, but we're gonna map it out with nothing on the screen so that we can really see it. Don't want anything on the screen. Okay, so in the context of, okay, I need it for a second so I can see where it is. Okay, so right here, 10:05. So 10:05. All right. In the context of this 1 minute 10:05 Bissy, right? 1 minute 10:05 Bissy. Okay. So now there we got that, and when we, let me see, I need all my stuff. I can't see. Okay, so all right, 15 minute. Let's do this right here. Oh, come on, Tim. There you go. And then 5 minutes. All right. I just had to pull up all the drawings so we can. Okay. So we're conceptualizing this. Right. So this green one is a 1 minute bullish fair value gap. All right. Let's do this. Put this on full screen. Put this in market replay, and we're going to come back to there. Okay, so this is a 1 minute chart. Bullish fair value gap. This is a 5 minute. We're going to make this orange right now. Reason why we're making it orange is because we had a 5 minute bullish fair value gap that we had already. Let's go to the 5 minute first before I say that. Okay, so on the 5 minute, we had a 5 minute bullish fair value gap that we offered sell side delivery. So we repriced it, and now price is back above it. So this should support price, keep price up. On the 15 minute, we have a 15 minute SIBI, which we have offered buy side delivery. We've left it, right? Offered buy side delivery, right? Right up here at the top of it, left it, and then we came back up and we closed above it, right? So now that we're above it, this should keep price up, right? This should keep price up. Boom. Price should be kept up from here. So let's go back to the 1 minute. Now that we got our bearings, this, let's do this right here so we'll understand it. Put this inside, right? Where's the hold on. And where's the oh, it's way down here. Okay. Hey man, where's the writing? Okay. So bears 15-minute. All right. Then repriced and repriced. Price is above should support price. Now, it's not just the fact that price is above it that it should report price, right? We're expecting it because all time frames, in a buy program. It's chop slop, but it's a buy program because we had a bullish breaking market structure on all time frames. We were respecting the discount PD arrays and we were disrespecting the premium PD arrays, right? So that's what's going on with that 15-minute, right? This same thing, I don't know if y'all can see that all that well. Okay, so that same thing applies to this 5-minute, right? We've repriced it and prices it's been repriced. Prices above it should support price because all time frames in a buy program. Same thing. Now, on the 1 minute, here we go. We came up. We had all of them in the buy program. So we right here we got a break. We got another break in market structure with displacement on the 1 minute. Right here, we come back down there. At this point, right here on this 1 minute, price should have gone back up, right? Price should. This is the this is the one right there that we was talking about earlier. Why I have this one marked out? Because it was in the same place as the 5-minute. I remember. I don't know why I got that marked out right there. Boom. It was in the same place as 5-minute. So with all of that in mind, from the higher time frames, the 1 hour is in a buy program. The 1 hour has broken bullish. The 15-minute is in a buy program. The 15-minute has broken bullish. We're expecting this to support price. We're above it. Stacked on top of it, we have a 5-minute imbalance, right? Not only do we have that, we got this 1 minute breaker right here, 5-minute imbalance, 1 minute imbalance. So you conceptualize this lower time frame as being high probability because you got all of this confluence stacked on top of it. And that's why when we initially marked it out, we did not want to see price come back here. You have to allow for it. But if it comes back down here, that's chop slop. It's not algorithmic because algorithmically, this area should have taken price back up to the buy side. It should not be slipping down through, coming all the way down. Let's go through. It should not do that. You see what I'm saying? This right here should support price. Yes, it's a 1 minute fair value gap, but that 1 minute fair value gap is sitting on top of a 15-minute fair value gap that's supposed to support price, on top of a 5-minute fair value gap that's supposed to support price. And the hourly is bullish. So everything is saying go up. So to be slipping all the way back down through a 15-minute PD array to come back down into a 5 minute or 1 minute is chop slop. You have to allow for it, but it's sloppy price action. And it's, it's been showing that all morning. And you know what I'm saying? If you didn't realize it before it got to this point and you took a loss messing around with this right here, don't fret. We all get zoomed in and we all fall victim. Dug myself out the little I dug myself out of the little bit of drawdown I was in, done for the week. That's what's up. Congratulations. I'm in a bit of drawdown, but I'm closing my charts for the day. Get back tomorrow. That's it. Congratulations. Discipline. You got to know yourself, because today is not a day to be trying to dig yourself out of drawdown. It's really not. Today is not a day to be trying to dig yourself out of drawdown. Regroup tomorrow, or take a break, come back and look at afternoon if you disciplined enough to do that, if your rules allow for you to trade in the afternoon. But today is not the day to be trying to dig yourself out of drawdown, because it's chop slop right now. I appreciate y'all for hanging out with me. I apologize for going over 16 minutes. It's 10:40. Wait a minute. Why does that? Oh, I was late. Yeah, I'm like, well, why does that say 17 minutes and that say 10:40? I was late. I'm sorry. Sorry for being late. Sorry for keeping you over. Again, if you got any friends that might benefit from tape reading with Timmy, please share it with them. Tell them to come over to that's the wrong picture. Ignore that. Tell them to come over to the YouTube page tomorrow for day 5 of tape reading with Timmy. Tomorrow, Friday, November 17th at 9:20 a.m. right here at youtube.com/thenewtlr. I appreciate y'all. Thank you for sticking with me. Hopefully I said something that helped somebody today. If I did not say anything that helped you, I would try my best again tomorrow. I promise you. Tomorrow, do me a favor. If you pull up tomorrow for tape reading with Timmy, pull up and share any feedback that you have for the week, for what we went through this whole week. Share any feedback. Constructive criticism is welcome. Just stay respectful for me and everybody else. Flowers are welcome. Opposing opinions are welcome. Hold on, my son just sent me a text with a face palm. Oh, it's all good. That messed up my concentration. I see y'all tomorrow at 9:20. Appreciate y'all again. Aranya Grande, aka Big Spider. Shout out Big Mick. Aranya Grande, aka Big Spider. Gone.